We've seen some headwinds in the last 3 years, and these headwinds are really explained by 3 charts. The first one, and this, by the way, contributes 70% to our underperformance, has been our South African hake business. You'll see on the top slide, we've had a very, very good period of consistent catch rates, averaging at around 9.5 tons per fishing day. Per sea day, and that dropped down by 25% in the last 3 years. That's correlated directly with our results. It's even been worse with the fuel price over that period that has almost doubled. It was at 6.50 Rand, and then we're trading now last year at 14 Rand. So those 2 particular variables had the impact of increasing our costs between 2021 to 2024 by 70%. I use 2021 because it was a record year for us. We made almost 700 million in EBIT in this particular business. I'd like to bring attention to the slide below. That gives you a 25-year history of catch rates in South Africa. You can see that we've had this before. It was in 04, 05, 06, as I've mentioned. Catch rates dropped to that level of 7.1, 7.2. So we are last year we were at those historical lows, but you can see how quickly it can move up, and it did move up afterwards to a high of 14 tons per day. So we've had 3 years in the cycle. If you look between 2013 and 2021, it's unprecedented that we had almost 10 years of very, very consistent catch rates and very little cyclicality in our business because of that. But obviously it has come off since then. So this was a big factor in our lives. The second one has been our prawn business. Very similar story. We are 28% below our 10-year average in terms of this particular resource. And that's because of heat waves. Heat waves affect 2 things. One is it destroys seagrass, in which case there's no food for the animals. And secondly, less rainfall. And that's what we've seen. The reason I mentioned the 10-year average is because we invested in these businesses in fishing. You never look at 1 or 2 years, you look at the average, and that's the basis in terms of your investment decision. And you can see 2024 is way down 2021 and 2022 when we made these investment decisions. It's been further impacted by the Chinese economy, and that's really the fact that it took a little bit longer to open up on COVID, created huge inventories around the world on prawns, and that's impacted the Australian market too. And we've seen a 23% reduction in our prawn pricing in the last 2 years. Abalone has a very similar story. If you recall, when we invested in our abalone businesses, the investment decision was based on 45% EBIT margins in these businesses, which were achieved historically. However, post-COVID, you can see what has transpired with prices. So pre-COVID to Q4 2024 prices have come off 35%. And it's in every category, 25% on live, 34% on canned, and 55% on dried. The point below is probably the most important. The kilo price has come down by $12 a kilo, and 1,000 tons that we have in our merged businesses is 225 million impact to the bottom line. And if you take 225 over the 500 and so revenue, it's back to the 45% margin. So this is a story about only one variable being price, mainly out of Hong Kong and China, and really driven by consumer pressures in China and Hong Kong, and resulting to less spending, particularly on products like abalone, which is quite an expensive product and usually consumed when they go out. You can see where it peaked at 1.57 Rand in 2021 and down to 55 cents last year. And all I've done is I've shown you in 3 categories what we just discussed. So in the South African fishing business, earnings have halved. They're 51% down. We posted 329 million. However, if you look at the impact from 2021, it's 360 million just on catch rates and fuel. Effectively would have wiped out the profit had management not intervened early enough, because we've seen this movie before, and really raise prices and slash costs. And that's really one of the reasons that in a very difficult time, we've still managed to post a 16% EBITDA margin in the business at a low point, which just shows the resilience of the business. In terms of our Australian business, just the lower volumes and the prawn pricing that I showed in the previous chart have hit us by 110 million. And again, that's what the expectations were, that those businesses would make about 100 million in EBIT. And finally, on the Viking side, I haven't included Aquinian here. I've just included Viking. And just year on year, we've had a 64 million turnaround just on price. You'll recall many times I have communicated on the roadshows that by now we would be at break even on these businesses. You can see that 2024, if we just had the pricing of the previous year, we would have actually been 40 million rand in the black. But unfortunately, it is what it is in terms of the markets. So the total impact has been 534 million rand over the period on that, which equated to rand per share was 1.24 rand. So if you add it to the 55 cents, all things being equal, if we didn't have these three variables, we would have been on the upward trajectory, hitting 1.80 rand per share. Based on that, we've had to relook at our strategy going into 2027. This is our 3-year strategy. I think 5 years is too long when you're in this environment. And firstly is to optimize our cash cows. Cash cows is our South African fishing businesses, which is our hake and pelagic businesses. On the hake side, it's really modernizing and investing in the fleet. We bought another 2 new vessels basically December, January this year to catch our quota. And at the same time, increase quality and exports. And on the pelagic side, again, we've invested in terms of modernizing our fleet. We're going to build 2 new vessels and increasing our factory throughput by 30%. That on its own will make a step change in the businesses. We're expecting that through the cycles, these businesses should be making around 700 million in EBIT. But again, it's dependent on catch recovery, which can be soon. But more importantly, we are streamlining the businesses to make sure that when catches do recover, and they do, we will be able to take advantage of them. The second one is to address the capital structure. So we would, as a management team, we've set our goal to reduce debt by 50% over the next 3 years. That will be a blend of selling some non-core assets, but also maximizing free cash flow. We've spent quite a lot in our businesses in terms of CapEx in the last 8 years. Our CapEx hump is completed. The business is now all at scale and focusing on managing CapEx, optimizing working capital, and Mo will get to managing dividends in his part of the presentation. And finally, we've got businesses in our portfolio that are positioned for growth, but it requires an upturn in the Chinese economy. The first one is abalone. So what we can do in the interim is get this business and reposition it and get it fit for growth by reducing costs, mothballing any underperforming farms, and more importantly, really merging and expediting the Viking aquaculture business into Aquinian. Aquinian, all its metrics are considerably higher than Viking aquaculture, and that on its own is a step change in the business. In terms of Australia, again, it's taking out costs and trying to make money at the reduced level of catch. And again, similar to hake, allowing the business or getting the business ready so that when you have a recovery in catch, you can optimize it. And again, there we're looking at those businesses contributing 100 million each in the next 3 years, provided, of course, you have a recovery in the Chinese economy, which an economist can give a. Being that as per listing, our target internally as management is to have an EBIT margin of 15%. Our return on investment capital equal to at least our WACC, which has been the rationale, and every investment decision we've made and everything we've bought, all hurdles were above WACC. But unfortunately, we've had certain exogenous events that have affected us. Improve the dividend and get to a HEPS of about 1.50 rand, over 1.50 rand in 3 years' time. That's our target as management over the period. And we will touch onto it later in the presentation in terms of how we believe that is possible.